it's Tom Gentile. Welcome to Tom's Trading Room, September 18th, 2015. We're going to go through about 5 different screens here on the short video blog. And of course, you can get all the details, including our trade alerts, by logging on to tomsoptiontools.com and just going ahead and putting your login and password in. You can get all the details to everything more than what I'm going to show you right now. So first thing is, let's go ahead and look at the overview. And so I want to look at 2 things real quick. Number 1, let's look at darknet. I want to show you something that when you get a breakouts like we had today, you know, we had yesterday, we had the breakout, we had the extension today, and if I go ahead and look at the penny and weekly stocks, which is what I like to look at, when we're bouncing around and we're actually moving higher, we'll see a lot of new trades come on. But right now, because we've broken out to the downside, darknet has done nothing except close up trades. Closed up trades, but has no buy signals, at least right now, until we get some sort of a bounce. Until we start seeing some channel collision, all right? Right now, we're not seeing channel collision. We're seeing runaways right now to the downside. So darknet is going to pause until it gathers some trades that have channel collision between short, intermediate, and long-term trend channels. What about money calendar? Let's go ahead and take a look and see what the money calendar is showing us going forward. And clicking on money calendar, you can see what's going on in September, all right? It's looking like fall. Looks like autumn came early this week as we bounced out of the 16th into the 17th, which went negative. Today went negative. We're expecting, based on pattern recognition, that negativity to continue into next week. Somewhere when we get into the beginning of October, we start to see green again in terms of historical patterns based on 10 years accuracy that have a pattern recognition of 90% or greater. But for the next week and a half, looks like it's going to be a little dicey, all right? So keep that in mind, and what we like to do is balance our positions out when we get into these yellows, reds, and oranges this particular period, which we are getting into and have gotten into really since Wednesday afternoon. All right, moving forward, let's go ahead and look at some stock charts. So this particular stock chart, what I did, because I had questions last week about how did you get the red line on here, Tom? How did you get the implied volatility on top of the stock chart? It's very simple. Over here where you see stock chart overlay 1, I put the 7 to 30 day at the money IV. I can change that and put down whatever I want, but I'm really kind of interested in what's been going on with the 7-day options, with the short-term options. As you can see here, that we really started getting volatility kind of rocking around. We're looking at crude oil first. I'm going to go backwards. But crude oil, you can see we got some volatility that came in the market when we had those big 5–10% up moves that happened back in late August. Since then, we consolidated, but today we dropped nearly 5%. Now, USO is a commodity-tracked ETF. Right? So it tends to rise in volatility when the commodity goes higher. It tends to drop when we go lower. Right? So keep that in mind. Commodity-based ETFs run a reverse pattern in volatility that paper assets like the stock market do. All right? And we're going to look at that in just a moment. Let's look at currencies. I want to go to FXE because I want to show you something. The derailed train has come back on the track. And so what we saw today was the market dropped and FXE dropped, okay? And so FXE is now starting to show more of a pattern, and has been in the past week or so, showing more of a pattern of moving up when the stock market's moving up and moving down when the stock market is moving down, because it is a risk-on asset, moves with the stock market, all right? Today, it was definitely risk-off, as was oil, all right? What about the bond market? TLT is the ETF we look at for bonds. And TLT will move opposite of the stock market. So when you see TLT go up, that's a risk-off move. That's exactly what we saw the last 2 days when the Fed made their decision not to raise rates. We saw a jump in bonds, all right? And we saw TLT move from 119. Within 2 days, it's moved to 122. Now, we know down the road the Fed wants to raise rates, all right? The surprise was they didn't even raise it 0.1%, which is what I really believe they could have done and gotten away with it, and it would have showed the world that although there are some concerns overseas, that the economy in the U.S. is doing great, and we are going to lift off of our zero rates. Well, that didn't happen, and that's why you saw the big jump. All right, will it continue? Obviously, we'll look and see what happens in the next week. I would expect to see some continued burn to the upside, not huge, but continue to move to the upside. If the stock market continues to fall next week, traders are going to put their money into risk-off assets like TLT. All right. I also want to make mention that you see that TLT, its 7-day volatility has been moving around, not based on direction, but based on range. All right, we get a huge range up or a huge range down. All right, which we saw here back in the last week of August. TLT move higher. All right. Last one is the one I saved, which is definitely not least, is SPY. You can see here a 30-day chart on SPY shows that nearly 30 days ago, the bottom started dropping out of the stock market, and volatility climbed up as we moved from nearly around 10 on the 7-day vol to close to just above 40. Since then, we've been slowly moving down. However, today's action did give us a bit of a creep up as volatility did try to move to the upside, with SPY dropping considerably. 300-point down day in the Dow is going to cause concerns and raise implied volatility. All right, moving on. Real quickly, I just wanted to show you what something I also look at is I like to look at prehistoric, the pre-computed IV rankings historically. I go back and look at them for a year, and I'm trying to find things that might stick out, that might give us some decent trading strategies. Bed Bath & Beyond, all right, is gotten extremely expensive. All right, that's one thing that I've noticed, and Finish Line as well. All right, when I look at these top 10 and I try to find things outside of ETFs, all right, or iShares, and so I see that Finish Line and Bed Bath & Beyond were near the top. All right, and that's for the expensive IV. Here's our high, 42.96. Here's our low, 16.95. Here's our recent, 35.49. So it is near the top of the echelon in terms of implied volatility. On the other side, I look at cheap. And try to look at cheap to try to figure out, is there a possible buying strategy that could happen? Call buys on the bullish side, put buys on the bear side, or even straddles for that matter. And I'll look, just really quick, look at the top 10 and see if there's anything that catches my eye. T-Mobile was interesting. TMUS, we've looked at that one in the past. And that's near the low side of implied volatility. Also, American Airlines and United. And then Delta was in here too. So in the top 12, we got the 3 big air carriers that are near the lows in implied volatility. And the reason why they're low? Well, number one, even though the stocks are typically dropping, USO is dropping too. So it is, they are seeing drop-offs in commodity prices. So that's not spiking the stocks to go either up or down, hence lower volatility. We can look at breakout highs and breakout lows too, but I tend to stick with the expensive and cheap options, all right? And finally, for those of you that are taking Mike Wade's Breakout Mastery course, this weekend you will receive on your Tom's Tools the new Breakout Trapper. I want to make sure that you realize that that's in Tom's Tools, and that Breakout Trapper consists of 3 little mini buttons within the big button, and that's something called Surf the Red Wave, a Breakout Straddle, an Optimal Straddle. He will start to be going into those next Tuesday at 8 p.m. and those are for those of you partners that are taking the Breakout Mastery series. All right, like I said before, check out www.tomsoptiontools.com for more details on what I just talked about, as well as we're talking about the synthetic straddle that we put on recently, how that turned out, and of course our new weekly trade alerts. Guys, have a great weekend and a great start to next week, and I'll be talking to you soon.